We're glad to have you back. We'll try to reconnect to my colleagues later, but let's get talking more business now. As Nigerians continue to grapple with the recent removal of fuel subsidy, latest data from the Organization of Petroleum Exporting Countries and Producing, of course, for crude oil production for the month of May shows that Nigeria is again ahead of Angola in daily crude production. This implies that Africa's largest economy now holds the first position and stands as Africa's largest crude oil producer. According to OPEC, the country's production rose 185,000 barrels from 999,000 barrels recorded in April to 1.18 million barrels in May. Now, as the country's crude oil production increases, what are the expectations, of course, for the industry in general? A partner at Zara Advisory and Consulting, Mr. Joseph Nwakwe, joins me via Zoom to talk around it. He is also a former chairman of the Society of Petroleum Engineers. Thank you so much for your time. It's good to have you on the program.
Thank you. Good afternoon.
Yes, let me start that finally we are speaking in a partly deregulated regime now. It's been a while, but finally subsidy is gone. No provision for subsidy. I don't know. How would you react to this first? Because I know that you've spoken around this a lot of times.
Yeah, well, I would say it's a positive development. It's long overdue. If you remember, we've talked about this for quite a while. And while there are some people who have some misgivings as to how it is being implemented, it's happening. So I think what we need to do will be to ensure that all the issues are sufficiently addressed to get us to a competitive market scenario. I think that's what everybody should focus on. And of course, the parties, whether it's labor, government, and all the other stakeholders, need to align on the specific deliverables that will enable, like I always say, removal was going to be painful anyway, but you can minimize the pain, and I think that's what we should all do.
Minimizing the pain. But let me ask you, some say the issue of price fixing shouldn't come in a deregulated market. How would you react to the mail or the message from the NNPC immediately after the president made the pronouncement that subsidy is gone?
Yeah, if you remember the conversation we had a while ago, I had said that there were steps that needed to happen, if you like, condition precedents to full deregulation, especially removal of the price cap. One of which is that you needed to diversify the supply side. So it's tough, right, to have a single supplier in the market, and then of course there are no price controls. It's almost like handing us over to one man, essentially. So that was the challenge. So I think the removal of price caps, or if you like, the subsidy removal happened ahead of those things that should have happened prior, right? So now we have to do catch up. We have to go back and say, okay, how do we make sure that there are other players in the market? So NNPC is seeing itself as a player in the market today. I don't think he sees himself as a single supplier to the market. So he hopes that others will join, but others will not join because there are impediments to that happening. So until we address those, which is ensuring that the other potential suppliers have access to Forex, those other issues, until we address those, they won't come in. So there's nothing wrong with NNPC coming and say, this is my price. We wish we had 5 other people who will come and say, this is our price, and then the competition will kick in. But that hasn't happened because we didn't quite address those other issues that I said were condition precedent to subsidy removal.
Let me also talk about pricing now. Many will say if you look at the pricing of PMS between Nigeria, Cotonou, Ghana, Cameroon, maybe neighboring countries, it sells for in some cases far above $1. And that's $1 plus in some cases. So that is what has made smuggling so attractive. We even hear of protests in some of these countries saying that they can't get Nigerian fuel anymore. Is that giving validity to the fact that smuggling was really the order of the day before now? Or what is your reaction to that aspect of downstream operations?
Well, I think it was obvious to anybody that cared to look at the numbers that we couldn't be consuming 66 million liters a day. The number of cars in Nigeria, 11 million plus, and the bulk, a significant portion of them are diesel operated as well. So it's something that I think we all knew that the numbers didn't add up. No one is surprised. We all knew that Nigerian subsidized petrol ended up in all manner of places, all across the West African coast, Cameroon, Chad. So it's not surprising that that was the case. And hopefully the numbers will now make sense, because that's once you remove the incentive for smuggling, today at current prices, I don't see a significant incentive for anyone to take petrol across the border. But if you look at Ghana, as at last 2 weeks when I looked at it's equivalent to about 800 per liter in Ghana. So, are we there? Maybe not. But that's I don't think our objective will be to equalize price across the region, right? Our objective really is to reduce the incentive for smuggling across the border.
The issue of refining would definitely come in when we talk about downstream movement of products, and the Dangote refinery is what everyone is talking about now. But we know government still has their own refinery, which according to the NNPCL, about 1.5 billion US dollars was invested in the Port Harcourt refinery. I think that is still on. We expect a portion of it, you would understand that better, to become operational very soon. But what is your reaction to refining capacity to help address some of these challenges?
Okay, it's an interesting time for Nigeria. I think we are, hopefully, if all the plans materialize, we will be in a position in a short while to supply our needs. If Dangote gets operational and the NNPC Port Harcourt is rehabilitated, I understand that could happen anywhere between now and the end of the year. So if we get those, and then of course Warri is equally being looked at, we will gradually get to a point where, hopefully, in not too distant future, where we'll be self-sufficient in terms of our petroleum products supply. So we need to exit importation, and hopefully that will happen. However, that doesn't deal or address completely the pricing issues in the market. Those refineries will have to sell at a profit, essentially, to remain open. So we will not. So when people talk about, they kind of mix it up. They think if there is domestic refining, then of course there will be no subsidies. No, it doesn't work that way. There will only be no subsidies if we price the products right, at a point where the refineries will make some money to be sustainable. So that's the point that needs to be clear to everyone, that the simple fact that we are refining locally does not guarantee low prices. It will, the prices should be competitive, I think, but it's something that we all need to be aware of.
Now, let's now look at the crude markets before we leave. We see an improvement in our daily production. That's real good news, because that's more money for the country at this time that government really needs to get money from all ends. That is looking good. We are leading now in Africa, surpassing Angola. What would be your reaction to that, or what are the positives in that? That is one. We also see the NMDPRA giving licenses to some companies and all of that. What is happening? The industry seems to be going through, or overall, something is happening differently in the industry at the moment. Can you tell us your understanding of this?
Okay, I'll take the first one. The issue of production output. I don't know what numbers you're looking at. I saw April and May. Those numbers don't look great. We are still under 1.2
Yes.
million a day. That is on OPEC, under the OPEC quota, right? Then if you add the condensate production, maybe another 300-400. So you're under 1.6. I think you're actually under 1.55 total. Now, is that something to be merry about? I really don't think so. I think we have installed capacity of that we need to clean up to get those volumes up. And hopefully the new administration will get on with the business of addressing those issues. So I am not excited, if I may say that, that we are doing 1.2 plus the condensates. I think we can do a lot better than that. I mean, being the highest producer in Africa is not an objective for Nigeria. That's not what it's all about. Okay. The second question was on
licensing. Yes, for oil export license.
Yeah, I saw that in the news about. So I think there's a tough war going on. I think that these are one of those areas that I think the PIB wasn't quite. There's an overlap, if you will, in responsibility between the two regulatory authorities, the commission and the authority. So I think that they need to get together and sort out who oversees what. Terminals, by definition, are actually in the midstream, but I understand that there has been a presidential directive that terminals should be regulated by the commission. So I think those are issues that they should resolve internally. I don't know. I saw it like anyone else in the news, and I felt, oh, here we go. We need to make sure there's clarity as to regulatory clarity is key. So we need to know who is regulating what.
But for a layman, it would also what is in it for us as Nigerians with improved production? That is really my question.
He said, what is in it for
Nigerians?
The average Nigerian? Well, I think the news about Belema, was good news. So that's one more additional export terminal, and I understand it's high tech. So that's a huge investment, if you ask me. So that's very positive.
Okay, then it's a good way to leave it. I must thank you so much, Mr. Joseph Nwankwe, partner at Zara Advisory and Consulting. Thank you so much for your insight into issues around Nigeria's oil and gas industry. We appreciate this.
Thank you very much, Tolu. Have a great day.